Hello, I'm Mark Abssy, Head of Indexing at Tematica Research, and welcome to the week ahead. So, this week was all about the Fed, right? Now, it's interesting to me because there are there's a lot of kind of sayings on Wall Street, right? One of them is don't fight the Fed, and the other is the market is always right. And when you look at what happened and what unfolded over the last week or so, the Fed has been telegraphing 25 basis points for a long time now. There was some survey I saw that said that something like 119 out of 125 economists polled were saying, yep, we're doing 25 and we're moving on. But, about a week and a half ago, Fed funds futures traders started to get a different feeling. And so we saw those probabilities that are calculated based on what's priced in the curve start to rise on 50 bips. And by the day before, that probability had gone up, or that possibility had gone up to about 60 or 65%. So it was really kind of interesting because on the one hand, you have kind of the Fed and everybody else saying, well, of course they're not going to do 50 because that would be too much. But the market is saying, I don't know, maybe it looks like they might do that. So anyway, turns out they did. And, from my perspective, I think that they kind of had to do 50, if only because, we're kind of locked into these 25 basis point increments in rates. And I feel that if the Fed could get away with doing like 3/8 or something a little more than a quarter, they would have, because it would have been a little bit of a bump and make kind of the markets happy. But at the same time, and we did see this as soon as they said it, that there were some circles that said, "Ooh, 50 bips, what's wrong? What's going on? What are we missing here?" And clearly, there are some concerns. I don't know if you want to go as far as call them concerns, but people are keeping their eye on the employment figures, and so folks are reading into that. I mean, they read into everything, but the point is here is that going 50 ultimately, no one really got hurt. Clearly, if they went less than what they did, or even if they went 25, I think people might have had minor tantrums or what have you. But at the end of the day, we've got 50. Everybody's happy. Now, the one thing that I think, and I'm sorry, I'm getting a little ahead of myself for next week, but I think that the Fed's been talking about being data dependent now forever, right? And so as these data points come out, the markets are reacting to them within the framework of kind of what just came before, and how does that forecast into what's going to happen next. I think one thing that is going to change certainly next week, and we do have a number of releases next week, is that people are going to be looking at whatever numbers come out, especially with surprises, not so much through the lens of, hey, what's happening in the economy now, as it will to say, okay, so because the Fed did 50 bips, what does this say about what they did in their last meeting? And so I think that certainly given any surprises, up or down, that we're going to see kind of overreaction to those numbers going forward. Okay. Now, when we look at last week, of course, overall the week was good. I mean, broad indexes ended up, right? Nasdaq Composite up about 2%. That led the pack. The Dow up about 1%. The S&P up 1.23. Kind of the big noise in a number of circles, of course, was gold. Right, gold crossing 2,600, and it was only about a couple of weeks ago that it crossed 2,500, and people were saying, "Oh my!" So now it's at 2,600. Undoubtedly, there are a bunch of gold bugs getting out their shovels and digging even deeper holes to store their gold in. Just because it's that much more valuable. But that gold has generally been kind of a defensive. Hey. It's an inflation beater, it's a market hedge. I mean, let's be real, it really isn't, right? My father used to say that, gold is useful when an invading army is coming into your village or your town or city, and you got to get the hell out of Dodge. He said that's probably the most use for gold that there is, right? It's portable wealth. Okay, but nonetheless, we're seeing gold above 2,600. And I think if you look at Gold Council notes, they will talk about how there's been lots of sovereign buying, and I think that's still kind of driving prices here. There certainly is a lot of gold used in retail applications and some in industry, but as of late, I think it's been kind of state actors that have been coming in and shoring up their gold reserves. In terms of models, when we look at the week, courtesy of Friday's announcement by Microsoft that they had inked a deal with Constellation Energy, we saw our nuclear energy and uranium model pop. It was a big pop. For the week, that model's up about 9.5%. On the day, it was about 7%. And in case you missed the news, Microsoft announced a deal with Constellation Energy that they are going to buy power from Constellation Energy in an exclusive deal. And the deal is that Constellation Energy is going to restart what folks my age refer to as 3 Mile Island, the nuclear power generating plant, and all of the energy produced by that plant is going to be then purchased and used by Microsoft, undoubtedly for data center, AI development, all kinds of tech uses, right? So that was a big thing that happened. I did see a story where Federal Energy Commission has yet to receive a request to actually restart that power plant. But the deal that they put together apparently sees a 2028 launch, right? Or at least the energy sharing or the energy purchase agreement for 2028. So, kind of a midterm plan, but still a great pop. And in fact, in our suite of models, we have about 190 individual names within the model, within all the models. And when you look at the holdings or the constituents in our nuclear energy and uranium model, 6 of them were top 10, and the balance were within the top 15 across all 190. So definitely, if you had exposure to uranium or nuclear power, you had a really good Friday. Okay. Let's see now. Of course, Friday was a triple witching. And, for those of you who don't know, but triple witching refers to index options, index futures, and single stock options all expiring and or settling on that one day. Turns out this past Friday, there was about $5.1 trillion of notional that was impacted by this. So there was a lot of expectation that Friday would be a down day. We did see the broad indexes trade lower, except for the Dow, which was up about 10 basis points. So really kind of mostly close to flat. Again, Friday, no real big moves in terms of sectors. Except for utilities, of course. Constellation Energy is a name in utilities. When you look at utilities as represented by XLU, which is the the Utility Select Sector ETF, that was up 2.64%. Constellation Energy had a 30% day on Friday. That translates to contributing to about 84% of that rise in utilities. So big day for utilities, but not for the traditional defensive reasons, right? Purely on the news of that Microsoft Constellation Energy agreement. Now, when we look ahead to next week, we do have a pretty busy week in terms of economic releases. Monday, we're getting PMI, both manufacturing and services. And when you look at what's been happening there, a lot of people have been kind of leaning on services as saying, hey, services is carrying the economy because manufacturing, has been lower. Now, manufacturing is expected to jump about half a point to 48.4. And while that is good, and we're happy to see those numbers rise, remember that with PMI, our kind of magic number is 50, right? And anything below 50 is indicative of a contraction. Anything above 50 indicates growth. So it's good to see the manufacturing is getting better, approaching 50, but it's kind of still not above 50, right? On the services side, expectations call for almost a point decline to 54.9. And, again, yes, it's going down, but still above 50. And it's, something not to get worried about, but at the same time, keep an eye on it. You pay attention to it, right, and see what's happening. Consumer confidence on Tuesday, expected to be kind of the same, really. No big shakes there. Wednesday, new home sales and permits, right? And new homes is expected to dip a little to 700,000 from 739, and then permits is actually expected to tick up a little, up 5,000, which on a kind of 4.7, 4.8, sorry, a 1.47, 1.48 million base, not a big number, but still positive. Thursday, final GDP, right? No big shakes there. There's no expectation of any changes for Q2 at this point. And then Friday, of course, and this is what ties back to what I was talking about earlier about given some surprises, because of course we're getting the PCE deflator. As you may know, that is the Fed's quote preferred inflation measure, and we're looking at top line. Looking to tick down a little. Expectations are calling for kind of a 2.3% number, and then core actually expected to tick up slightly to 2.7 from the previous 2.6. And again, when I was talking about the potential for kind of outsized or exaggerated reactions to surprises, of all the numbers that I just listed, PCE deflator, if there is a surprise in that, the market's not only going to react to that surprise, but within the framework, within reference to the Fed's 50 basis point move, right? When we look at earnings, not a lot going on next week, but we do have some names of note. KB Home is going to report on Monday, AutoZone as well. So, definitely some consumer updates there. I mean, for the real consumer updates, we look to the back end of the week, and we'll see Costco is reporting. So, we're definitely looking at that to see if they're seeing still the same kind of forward-looking weakness that they saw last time, but then also are they going to mirror what Walmart and other retailers have seen so far? Jeffries is going to report in the middle of the week, and that'll be interesting to see what kind of deal flow there has been, what kind of prospects they see for deal flow going forward. On the tech side, BlackBerry and Jabil will be reporting as well. So there's some cybersecurity spending there. There is some other kind of semi and chip spending there with Jabil. That is honestly, that's about it from my end. So we have economic data coming out next week. We have some earnings to pay attention to. And that's about it. So thanks for watching, and we'll see you soon.